Wall Street is anticipating the outcome of the big story of the recent weeks. The market is alert to the Fed's response to the banking crisis. The regulator has to adjust its policy decision to high stubborn inflation and the fallout from the aggressive monetary tightening that dealt a blow to banks. All in all, the market has been gripped by high volatility and investors have been speculating on a further monetary policy. Today, they will solve the puzzle. The Federal Reserve will unveil its policy update that will be accompanied by Jerome Powell's press conference. Wall Street is looking forward to the crucial event in the elevated mood. Stock investors struggled off fears about liquidity in the banking sector. The benchmark stock indexes went up. The major stock indexes closed with the gains for a second day in a row, and the Dow Jones climbed by 316 points or 0.98%. The Nasdaq jumped by 1.58%. The S&P 500 surged to 4,002 points and closed 1.30% up. Investors were in a limbo in the New York pre-market. The top indexes traded mixed, fluctuating around the levels reached yesterday. Further dynamics will depend entirely on the Fed's rhetoric. The market may both rally or fall, so the S&P 500 is expected to trade in a wide corridor between 3,870 and 4,120 points. On a Tuesday, the energy sector, consumer sector and the financial sector inside the S&P 500 looked the strongest growth. Shares of the banking sector rebounded, extending the gains of Monday. The banking sector of the S&P 500 and the regional banking index rose by 3.6% and 4.8% respectively. It's the biggest growth since late 2022. Speaking for American bankers, Treasury Secretary Janet Yellen stated that the U.S. banking system was again on sound footing thanks to resolute actions of regulators, and she warned that extra measures might follow. Shares of a First Republic Bank rallied by 29.5%, the sharpest intraday growth. The reason is that JP Morgan CEO Jamie Dimon is negotiating with the other large banks about investments in the alien lender. Shares of a PacWest and the Western Alliance also surged by 18.8% and 15% respectively. Tesla shares climbed by 7.8% after the e-car manufacturer reported extremely upbeat quarterly results for China. Eventually, 8 out of 11 sectors in the S&P 500 closed yesterday in the green, with the energy stocks showing the biggest gains. Today, traders are shifting focus to the U.S. Central Bank. Futures on the U.S. stock indexes traded cautiously in the pre-market. The U.S. Fed will unveil its decisions and state its agenda for further policy after the opening bell. While the Fed's policymakers are discussing their viewpoints, analysts are betting on a rate hike by 25 basis points. The prospects of further rate hikes arose questions. Uncertainty about monetary policy triggered wild price swings in all types of assets in the last couple of weeks. Besides, the bond market went through the most volatile months since the banking crisis 15 years ago. Today, yields of a 2-year Treasury stand at 4%, but intraday swings have been more than 25 basis points since March 10. Notably, on March 15, yields gyrated by more than 70 basis points. The Federal Reserve is facing a tough challenge. Jerome Powell will have to comment on burning questions about financial stability, latest emergency lending and the recent economic forecasts. As for the corporate news, shares of a First Republican Bank grew by 1.5% in the pre-market. PacWest and the Western Alliance rose by 0.5% and 1.3%. In the high-tech sector, Alphabet launched its chatbot Bard, awaiting feedback from its users. The company aims to outpace Microsoft in the superiority in artificial intelligence. GameStop shares rallied by 47% after the company reported higher than expected profit for the fourth quarter due to the lower spending and the job cuts. Nike shares slipped by 0.48% after the sports clothing manufacturer upgraded their revenue forecast for the whole year. Other news in the corporate sector could prop up growth on Wall Street until the Fed's meeting. Still, robust market moves will occur after Powell's press conference. The US dollar index remains under pressure. It's hovering at around 103 points. The greenback is wound down by the euro and sterling. The intraday carried out for the US dollar index is seen between 102.5 points and 104.2. Today, the index is pinned at the lowest levels in 5 weeks before the Fed's policy meeting. A rate hike by 25 basis points is the most realistic scenario. Investors are keen to find out what Powell will say about the crisis in the banking sector. Investors feel relieved after Credit Suisse was taken over the UBS and the US authorities supported some vulnerable domestic banks. The US dollar lost its luster this week as a safe haven asset. The Fed stance and the forecast will be the key to market sentiment. Earlier this year, the regulator detected some signs of a disinflation but advocated for further tightening for longer with the higher interest rates. Despite easing inflationary pressure, the annual CPI is way above the Fed's target of 2%, and the labor market is showing resilience. However, the banking sector is checking the ongoing tightening cycle for efficiency and prudence. In the light of the developments in the last 2 weeks, investors want the US Fed to soften its hawkish rhetoric. If the regulator sends dovish signals in line with the expectations, the US dollar could weaken. Otherwise, the US dollar could develop a rally. The Canadian dollar lost ground yesterday and opened flat today. The USD CAD pair inched down by 0.01% intraday to trade at 1.3710, and the instrument is expected to trade in the corridor between 1.3650 and 1.3790. Like Wall Street, the currency and commodity markets were in suspense before the opening bell. Popular assets traded quietly. Oil prices rose by more than 2% today, trying to extend their growth before the New York session. Brent crude shed 0.2% to trade at $75.22 a barrel, and WTI slipped by 0.5%. U.S. crude inventories expanded by almost 3.3 million barrels last week, and the American Petroleum Institute reported. The actual growth defied expectations of a contraction by 1.6 million barrels. According to the U.S. Commodity Futures Trading Commission, net long positions on the WTI futures and the option contracts went down in a week ended March 14. Analysts agree that the drop in oil prices has a speculative character. Fundamentally, beyond the demand is bullish for the oil prices. Meanwhile, the crypto market is trying to make the most of the banking crisis. Bitcoin is extending a rally today. The token approached $28,300 before the opening bell. Unlike the flagship crypto, Ethereum, Solana, Ripple, and Litecoin came under selling pressure. The digital gold is enjoying the status of an alternative financial asset. This year, the crypto has skyrocketed by more than 70%, outpacing other popular tokens. On a Sunday, Bitcoin completed the strongest week in the last 4 years. It jumped by 45% in 12 days. Crypto fans are sensing déjà vu. In the past, Bitcoin used to gyrate due to changes in the monetary policy in the world, when the global central banks pumped up the global financial system with a stimulus. During the pandemic, investors enabled a six-fold rally of Bitcoin from September 2020 until November 2021, and the crypto surged to $69,000. And now the main driving force of a crypto is the bulk of market participants, retail investors. Institutional investors and pension funds are still cautious about the number one token. The intraday outlook for Bitcoin depends on the Fed's rhetoric. Depending on the Fed's stance, the token could either sink to $26,900 or rally to $30,000. Make profits with the InstaForex and don't forget to manage your risks. Good luck!